Hi everyone, this is Sandeep. Anand. Investing is simple but not so easy. So said the legendary investor Warren Buffett. Now, what's the not so easy or the difficult part in investing process that Warren Buffett is alluding to? That's exactly the point, or that's exactly the topic for this video today. That is the pain of becoming a multimillionaire or a billionaire through the process of investing. Now, let me explain what first a multi-bagger means. A multi-bagger, I think, is a terminology commonly used in the markets, I think introduced by Peter Lynch, which means that a stock that has multiplied 2, 5, 10, 50, 100, 1,000 times through its entirety. Those are multi-baggers. And to create a multi-million portfolio, you at least need 4, 5, or 10 of such big multi-baggers in your portfolio, which means it should multiply so many times for you to get that exponential growth of your portfolio. Now, it's not about finding that multi-bagger idea that's going to make somebody's portfolio so rich, but it's about holding those multi-baggers through its entirety and getting the benefit of holding them for such long time. That really makes a difference to somebody's portfolio. And you might be wondering, what is a big deal in holding 5 or 10 or 15 stocks if you already know that the company is doing good and you already found a multi-bagger? What's a big deal in holding 10, 15, 20 years? Well, that's my point, my friends. It's the painful part of becoming a multimillionaire. Now, I'm going to vindicate my point with three examples, real life examples, that just happened in the last decade. And these three stocks are from different countries, different sectors, just to vindicate my point that, what is actually that pain inflicted or the pain of going through this journey to become that or to create that multimillionaire portfolio. Let's get into that. So here on your screen is Bajaj Finance, the first stock that I'm going to talk about. It's a company in India. And on March 2011, Bajaj Finance stock, I'm going to take a period like 10 years back, like now it's 2021. I'm going to go back to March 2011 when Bajaj Finance stock was trading at a price of rupees 60. The total returns given by this company in last 10 years is 90 times. Now, the interesting aspect is in 2011, Bajaj Finance has become a well-known stock. It started turning around in 2009-10 and it was pretty known stock. Now, if you had held it through this 10 years, the returns is 90 times. Now, what is the pain of holding this stock for 10 years? Let's check this chart. Look at the drawdowns, which means look at the fall. The stock fall has fallen how many times in the last 10 years? In 2013, it fell 30 percentage. In 2017, it fell 28 percentage. In 20, I think 18, 17, 18 period, it fell 25 percentage. In 2020, recently, it fell 60 percentage. Now, if you had invested, say, 1 million rupees in Bajaj Finance in 2011, it would be worth approximately 1.2, 1.3 million dollars in as of today. But it did not come that easily in the journey, right? I mean, there were four drawdowns, which is more than 25 percentage, three drawdowns, and one above 50 percentage. And the interesting part, it's not only holding these through the drawdowns. After that, you have to understand one more important situation here, which is zero returns during below three situations, right? So you look at 2010 to 2012, it had returned zero in 2 years. And this was just before the fall of 30 percentage in 2013. Then 2013 to 14, obviously it fell, so it gave us zero returns. 2018 to 20, 2 years period or roughly two and a half period, it didn't move the needle. It was zero returns. Now, that's the pain I'm talking about. Imagine yourself holding that money through going through these periods. Now, the next stock in the screen is Netflix, which is another successful stock. It started trading on May 23, 2002 on the NASDAQ. Total returns until 2021 from the day it started trading, that's like 20 years, it's approximately 426 times. 426 times, that's a whopping return Netflix has given in this period. Now, presumably you hold it, you started investing say in 2011, let's or 2009, after it started turning around, it was well known, right? And say you invested in 2010, immediately in 20, I think 2011, 2012 time period, the Netflix stock corrected almost 80 percentage. That is A significant correction one can even imagine. And after that, holding it through, if you held it through, there was a correction of 30 percentage in 2017, I mean 2018 period, I think. And imagine the number of zero return periods. There were four spans of periods, like 2004 to 8, zero returns. 2011 to 13, even after it started, after it corrected 80 percentage, that period, it was a zero returns. 2014 to 15, again, zero returns. To 2015, 2016, again, zero returns. So there were almost four bouts of periods where it had given zero returns and two drawdowns, which is about 30 percentage. And there were intermediately many drawdowns, which are even 25, 20 percentage. I'm not putting that for the sake of simplifying this. Now, next stock is a completely new sector or completely happening sector, and everyone are talking about this stock in this decade as we are talking today. Yes, it's Tesla. Now, Tesla is the most happening stock in the market today. Its stock, Tesla started trading in 2010. The total returns till 2021 is 150 times, that is in 11 years. Now, this did not come with an ease of holding it because Tesla is probably one of the stock that would have had maximum turbulence, a roller coaster ride for whoever held it, but got benefited really. Now look at the drawdowns. I've just pulled in just three. There are many drawdowns in Tesla, actually speaking. So in 2016, it was down 30 percentage. In 2019, it was as recently, it was down 50 percentage, near bankruptcy levels. 2020 in March, when the market crashed, it went down 60 percentage. That's brilliant. Now there were many 20, 25 percentage drawdown through this period. I'm not bringing that on the screen. And the interesting part is it was down more than 30 percentage during 8 times in this 11 years. 8 times it fell more than 30 percentage. It fell down more than 40 percentage 3 times, right? And down 50 percentage 2 times, which just happened last 2 years back to back. And it fell down 60 percentage once. So totally zero returns period for Tesla. It was for 6 years there was zero returns. That is from 2013 to 2019. Look at that on the graph. It's flat. It did not get any return, give any returns for 6 years. All the returns got back ended the last 2 years or presumably last 1 year. And an investor who held through this pain has got benefited immensely with a 150 times returns. Now, let me explain the pain of holding the stocks. What is inflating this pain or holding these multi-bagger stocks for long periods of time? What are the reasons for that and how we can overcome so that when we find the next multi-bagger stock, we hold through it and go through that pain? The first point is we should understand markets are short-sighted animals and price movements can be influenced by emotions and volatility is part of the game for short term. Stock can get corrected more than 30, 40, 50 percentage multiple times during this journey. Stocks can multiply 50, 100 times. Usually start small or mid-sized companies. That's the difference. And these stocks, because they are small in size, tend to be very volatile. When the market falls, that indexes fall 10 percentage, these stocks can get corrected 30, 40 percentage. As we are talking recently, in the last 2 months, we are seeing such behavior in NASDAQ stocks, certain stocks falling 70, 80 percentage from the peak. I'll do a different video on that, but there can be long periods of holdings without any returns, that is zero returns, up to even 5 years. We saw in Tesla's case, up to 6 years, there is no returns. It will really test the patience and conviction of investors. Holding the multi-bagger stock with temperament during the long non-performance periods when all other stocks are making better returns in the market is really painful. One has to go through that experience. Even 1 year is a difficult period to go through without any returns. And it's even more painful when you see others making money in different other stocks. We tend to switch the boat. And it's very difficult to hold that stock for long periods of time. And the most important takeaway, if there is one from this video, is all the stock returns from multi-bagger stocks comes in very non-linear way. That's the nature of the market returns. They are never linear returns year on year, like the earnings. So the market returns comes in a very non-linear way, in a sporadic way. In certain spurts of periods, you get very high returns, and in certain spurts of periods, bouts of periods, you will have zero returns. That's the pain of holding multi-baggers. I wanted to bring this video because when you find the next multi-bagger, good luck with that. But when you find them, it is going to be painful for holding long periods of time. But if an investor has a conviction on that company and its prospects in future, one should be able to hold that, and one should go through this pain for a better rewards and create a multi-millionaire or a billionaire portfolio eventually. Thanks for staying with me. This is Sandeep Anand.